Hi, everybody. I'm Brittany Lewis with Forbes Breaking News. Joining me now is the People's Actions Homes Guarantee Campaign Director, Tara Raghuveer. Tara, before we get started, could you first explain what is People's Action?
People's Action is a national organization of community groups across the country organizing on all sorts of issues like climate, healthcare, and housing. I'm the Homes Guarantee Campaign Director, so I run our housing campaign with a focus right now on the federal government and the ways that federally backed mortgages must be conditioned on a set of tenant protections.
When we last talked in May, one of the first things you said to me that really struck a chord with me is the rent is too damn high. Your exact words. Now, a few months later, do you still feel the same way?
The rent is too damn high, and in fact, it's higher today than it was the last time we spoke, Brittany. And rent continues to be the most enduring and significant factor in overall inflation. So this is not just a housing problem. It's not just a problem that has to do with tenants. It's actually the problem, I would argue, at the center of questions of our economic stability and this country's long-term economic prospects. So the rent is still too damn high. It's even higher than it was before. And there's no real signs of the rent slowing down or that price of rent getting any easier on poor and working class people.
And this comes at a really interesting time. Like you said, the most recent CPI report indicates that rent increased 7.8% year over year. And in just a few days, starting in October, student loan payments will resume. So can you lay this out for us? What specifically is this doing to renters?
Renters are hurting. Renters are hurting. They've been in pain. For the last 3 years, we've seen record rent hikes. And during those 3 years, student loan borrowers haven't had to make their student loan payments. So October 1 actually represents a really dire moment for a lot of poor and working class people, especially those with student loans that they will need to start repaying again. There's about 27 million people who will be making their student loan payments for the first time in 3 years on October 1. And a lot of those people are people who are saddled with a ton of rent burden as well. There's millions and millions of households in this country who are paying well over 30% of their income in the rent. The rent is their biggest bill every month. And it's not a bill where you can make decisions about cutting back, right? It's not like groceries. It's not like gas. You can't just cut back on the rent. The alternative is actually homelessness. So when you add in another major payment that people are going to have to make every month, we're approaching a moment of real shock and pretty significant pain, especially for poor and working class people with student loans.
I do want to talk about who do you think is to blame here, because right now Americans are saying this is the economy is the top issue they face. According to a recent ABC Washington Post poll, 74% of Americans say the economy is not so good or poor. And adding another bill into the mix that they haven't been able to pay for 3 years is going to be really staggering. It could be life changing. So is this one group's fault, or is there a bunch of factors we can point to?
There are a lot of factors we can point to. I think one of the most important questions when we're thinking about student debt is thinking about the role that the federal government played in the last 3 years to actually ease some of the pain on student loan borrowers, right? I think the pandemic actually shed light on a lot of the powers that the federal government has to ease some of these burdens on everyday people that they're not necessarily using in a systematic way or in a way that can extend over time. So one question is, what is the role of the federal government here? There is more that the government can and should be doing to ease this debt burden on student loan borrowers. Another big factor here, though, is the prices of all of these other goods and services that have increased over the 3 years that the student loan payments have been paused. And the most significant one is the rent, right? In those 3 years that the payments have been paused, the rent has increased tremendously, right? At levels that we haven't seen in 30 or 40 years. And there are institutions that have increased the rent, right? There are people and institutions at fault when we think about the burden of that cost. There are corporate landlords who have raised the price of rent way above and beyond the rate of inflation at this point. And so they're doing what we would describe as rent gouging. They're taking advantage of limited affordable supply of housing, and they're demanding higher and higher rents with no end in sight.
What do you think that the federal government can do then? What can lawmakers specifically do? Because, like you said, the average U.S. renter is rent stressed. They're paying 30% or more of their income on rent. What can be done, or what would you like to see be done?
I think right now lawmakers are actually underestimating the amount of stress that everyday people are under when they think about their rent payments, and the ways that the biggest bill that they pay every month also impacts everything else about their life. And I actually think we're going to start to see this become the key economic issue, especially as we look to the elections next year. So it would be wise for lawmakers to start to pay attention to this major pain point for working class people. And there is something that the Biden administration could do today that would actually cost no money, and it would provide immediate material relief to millions of households across the country. And that is that the Federal Housing Finance Agency is actually the regulator of Fannie Mae and Freddie Mac. And those two are major players in the secondary mortgage market, which is to say they make $150 billion in loans to landlords every year to provide homes for people across the country. So FHFA and the Biden administration could actually apply conditions to every dollar of lending that is backed by the federal government. They could say, if you're benefiting from these lucrative terms, you're on the hook, right? You actually can't increase the rent more than 3% year over year. You also have to sign up for all of these tenant protections to make sure that people can live with the security and the dignity that they're owed, right? So this is a very immediate step that the Biden administration could take. And our research says that if they took this step, this would impact up to 15 million households in the United States immediately. And again, it wouldn't cost anything, right? This is a no cost regulation that would immediately and effectively improve a lot of our lives.
15 million, that's a huge amount of households across the country. Is there any indication that the Biden administration would do this? Have they been responsive to those calls?
We've been working really closely with Director Sandra Thompson and the Federal Housing Finance Agency. This summer, they issued a public request for information about this exact type of rulemaking. And we submitted thousands of comments from tenants and our allies, economists, academics from across the country throughout the summer. The opposition also submitted a bunch of comments. So the industry that actually puts a price tag on our homes obviously has an interest in making sure that this type of regulation doesn't exist, right? They benefit in a world where their business is not regulated and they can do whatever they want. So we're in the midst of this process right now. FHFA is considering these regulations. I hope that soon we see the Biden administration really prioritize this as a key policy move that they can make at zero cost to the American people, especially before 2024, when this conversation about the economy is really going to come to a head.
I'm curious what you think is missing from the national conversation right now. I've had plenty of conversations about student loan payments resuming. We've talked about high rent a few months ago. I live in New York. You really can't get into a conversation about housing without talking about just how high your rent is for the amount of space you're getting. So what do you think is a piece of the conversation that's missing?
The critical piece that's missing is the role of these corporate actors in defining everything about how we live. And then importantly, the role of the federal government, which is currently sort of an enabling role. The federal government actually backs these loans to the corporate landlords that control our homes, and they do so on really lucrative terms. And those loans come with almost no strings attached. So the question that we're trying to call is this question of what is the role of the federal government in protecting people like you and me, tenants in this country who do not have any of the protection or subsidy that comes with being a homeowner, but are nonetheless critical contributors to our communities, and nonetheless people who need homes that they can depend on with security.
The numbers, the stats that we've been talking today, I mean, it sounds pretty bleak if you're renting. And I want to talk about the path to home ownership today, because that used to be the American dream. You get a house, white picket fence, that whole type of thing. But right now, so many people that I talk to, that dream is completely off the table. So what do you think about that conversation?
That dream is off the table for many people, and it's important to note that that dream has never been on the table for many, many more, right? The way that home loans have been made throughout history has been an exclusionary. It's been a story of exclusion and a story of who has access at various moments, and a lot of that access is granted or again sort of established by policy that's made at the federal government level. So one thing that's notable about these student loan payments restarting on October 1 is that 70% of student loan borrowers are between the ages of 25 and 49. That's also the same exact age range of people who are usually buying their first home, right? So there's a whole category of people today who are not on a path to home ownership and maybe never will be. And actually, that adds even more stress to the rental market, right? That adds even more pressure on the demand side on the in the rental market, which only creates more opportunity for these corporate landlords to take advantage of us and hike the rents unless the federal government actually intervenes and regulates their business.
What advice or what's your message to renters who are dealing with the sky high rent paired with having to pay student loans back in just a few days? What can they do right now?
Tenants need to get involved in organizing their buildings with their citywide tenant union if one is available to them. There's really only one path forward for both student debtors and tenants, many of whom, of course, are the same people. And that path is to organize together. It's to come together and collectively take actions that we can't take alone, right? I think there are other people who can advise student loan borrowers more specifically on what they're supposed to do with these upcoming payments starting on October 1. What I can say from my standpoint as a tenant organizer, as a campaigner, and as someone who's working at the intersection of these issues is that really the only path forward is us coming together, poor and working class tenants coming together with student borrowers and for the type of structural change that we need to see in order for all of our lives to improve.
Tara Raghuveer, I appreciate your insights. Thanks for coming on.
Thank you. Take care.